Hey, Greg Dorsey here. It's Monday, March 28th at Leeb.com, Leeb.com. Be sure to sign up for our free newsletter if you haven't done so already. Chock full of great info for you. Well, let's see. This morning we learned that consumer spending picked up slightly. It was the 8th consecutive monthly increase. The disposable personal income also ticked higher, although if you adjust for inflation and taxes, the gain was nothing to write home about. Which is perhaps why the stock market yawned in reaction to the news. Trading volume was exceedingly light today, as it was for all of last week. In fact, excluding holiday-shortened trading weeks, you have to go back to the 2000 bear market doldrums to find a week where trading was as light as it was last week. We do have a packed economic calendar ahead for the rest of the week, any number of data points which could bring traders back in and move the markets. Those numbers include chain store sales, the Case-Shiller Home Price Index, which is expected to show a 0.4% year-over-year dip in prices. Jobless claims are expected to come in around 380,000. Analysts are expecting a reading of 70 on the Chicago Purchasing Manager Index and a 0.5% increase in factory orders. And then on Friday, rounding things up, are the car sales and the employment picture, with the consensus expecting the jobless rate to stand at 8.9% and for non-farm payrolls to climb by 200,000. Now that said, stocks are toward the upper end of their trading range right now, and it's hard to see them taking off from here in the short run. Of course, there are also a number of external events in the world that could have an adverse impact on trading. Japan's nuclear disaster is no closer to a denouement, for instance. This threatens to prolong the country's economic contraction and disrupt the global supply chain. That could have an impact on U.S. corporate profits if it drags on long enough. Interestingly, there's now talk in Japan of decentralizing Tokyo. The metropolitan area is home to some 35 million people, and it represents more than a third of the country's economy. Moving substantial numbers of jobs and people out of the Tokyo area will require considerable infrastructure construction and will place further demands on resources that are likely to already be constrained. That's one more bullish argument on the long-term case for commodities. Well, that's all for now. Be sure to stop by later in the week. We'll have plenty more for you.